Hey, it's a great day to do a talk on what's happening in the markets and the economy as the stock markets globally have rallied despite Europe doing all that they can to wreck it by putting short sale bans in place in Italy, Spain, and Belgium and France. These things never work, and they actually make people sell faster. But today, the markets were calmed and inundated with actions by the U.S. federal government to address the spread of the virus and stimulate the economy. So quick check before we get started to see where the number of infections currently are today. They're at about 5,700, and that's up 1,000 from yesterday and about 4,000 from Saturday. And as I've been saying for quite some time, my over-under for Friday of this week is 20,000. So over 20,000 is the equivalent of saying on Groundhog Day, the varmint saw his shadow and we're going to get 6 more weeks of shutdowns. Under 20,000, the groundhog didn't see his shadow and will experience an early reprieve of the virus. That's the best we can hope for. Now, that said, what happened over the last few days is nothing short of spectacular. The S&P 500 was up 9% on Friday, down 12% on Monday, and then back up 6% on Tuesday today. Now, my top 3 catalysts for the rebound and maybe some of the stabilization are this. Number 1, the Federal Reserve cutting interest rates to 0, starting quantitative easing again, and starting financial crisis programs like backstopping the commercial paper markets, which weren't really functioning well and are at around about $1.1 trillion in total. Now, number 2 is 3 different spending bills coming out of Congress. One was signed, one was passed by the House, but not by the Senate, and one is being proposed for somewhere between, $750 billion to $1 trillion. One proposal from Treasury Secretary Mnuchin is for a $1,000 check to go out to every American, and that's about $250 billion alone. Now, number 3 of my good things is globally, central banks and governments are acting to provide liquidity and stimulus to their financial systems and their economies. That's great news, all done in unison. Now, there is also a lot of bad news on the global economy that's coming, and there are additional concerns really about shutting borders down and curbing trading hours. That's never good. The EU and other countries have announced that they're shutting down their borders to foreigners. The U.S. announced bans on incoming international travelers, foreigners, and this comes on the heels after the CDC put out guidelines on limiting meetings for people over 50, and also, limiting the number of people to 50 for meetings, 50 or larger, and that was eventually reduced down to just 10. Now, sadly, a lot of college kids went down to spring breaks and ignored this, as did a lot of people who participated in the St. Patrick's Day celebrations, like places in Chicago. I hope none of them get sick, and I hope none of them actually spread the disease further. That would be a tragedy. It saddens me to think that there's going to be some kids that are going to get sick because of what they did, but so be it. All of this led Illinois Governor Pritzker to announce the closing of all bars and restaurants until March 27th, and San Francisco telling their citizens to shelter in place. That just seems crazy right now, but that's what's going on. And New York City is considering a similar shelter-in-place order coming from Mayor de Blasio shortly. The UAW president has asked Ford, GM, and FCA for a 2-week shutdown. And remember that NIAID Director Dr. Fauci has stated that he wants to risk overreacting than underreacting to this virus. He said that they want to try to prepare for not what's happening now, not for what's going on right now, but what's likely to happen in the future and just in the short future. So they really want to overreact and shut down as much as they can for a shorter period of time. Otherwise, they're going to end up shutting down for a longer period of time. Now, all of these are tough measures, but all may be required to flatten that inflection curve to a lower level and eliminate a spike of infections that they had, similar to what happened in Italy. Now, what does this all mean for the economy? Well, I was thinking about this because I was remembering another time in my life where something like this happened when I was working actually in the theater as a stage manager for a show, and I was in the light booth calling the cues, for lights and sound, and we had a major problem occur. Our light board went out during a blackout. In other words, nothing was working. And I asked our light crew what they could do, or what would you suggest to do before the next scene started, because it was coming up quickly. We only had like about 30 seconds before the next scene started. And they said the only thing that they could do and would be able to do would be to turn off the keyboard to reboot it. Now, I asked them, would we lose all of our 100 cues for the lights and sound if we did that? And they said, maybe. We've never done it before. And this is where we're at with the U.S. economy. We are essentially turning off our economic light board to see if we can reboot it and not lose all our cues for the economy. Now, the forecasts from the major financial institutions for Q2 GDP are terrible. They run from -3% to a high of -10%. Millions are likely to lose their jobs in the hotel, airline, bar, restaurant, and energy fields. Dire stories of the airline industry going under are circulating. These are dark times, to be sure. But in the darkness, there's always hope and there's always opportunities. And I'll be talking more about those over the coming days and weeks. Oh, by the way, we did turn the computer light board off, and then it worked. So we got to run the show. And I think that's what can happen for the U.S. economy. All right, I'm Andy Busch, economist, market expert, and keynote speaker. You can get all of these videos on my YouTube page, and they'll be posted on my website as well. Check out the description area in the YouTube channel for great resources on the virus.